Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Snap. Should we run away from this disappointing Q3 results that happened last Thursday, or is this a buying opportunity for Snap? Let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give up my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Snapchat operates as a camera company in the United States and internationally. The company offers Snapchat, a camera application with functionality such as the camera, communications, Snap Map, stories, Spotlight that enable people to communicate through short videos and images. It also provides spectacles as an eyewear product that connects with Snapchat and captures video from a human perspective, and advertising products including AR and Snap ads. Now, the company was formerly known as Snapchat and changed its name to Snap Incorporated in September 2016. Now, Snap Incorporated was founded in 2010 and is headquartered in Santa Monica, California. So let's go ahead and look at some of the news of the company. Well, Snap reported its third quarter earnings on Thursday, and it was a doozy. They missed revenue expectations after Apple's iPhone privacy disrupted its advertising business, and the company also warned that global supply chain interruptions and labor shortages reduces short-term appetite to generate additional customer demand through advertising. This has definitely hurt short-term, but I'm going to get into later on exactly what I think about that. And recently, as of Monday, Kathy Wood's ARK Next Generation Internet ETF just purchased 301,000 shares of Snap on Monday. So she doesn't think she thinks it's a buying opportunity. So let's go ahead and look at some of the fundamentals of the company right now. So the current stock price of Snapchat is $55.39 a share. With a market capitalization of around $89 billion. The revenues by the end of 2021 are estimated at $4 billion with a negative $662 million in earnings. Now, the revenues by the end of 2023 are forecasted to be $8.3 billion with earnings of $790 million. So it's definitely going to become profitable. It's forecast to be profitable over the next 3 years, which is considered above average market growth. Now, go ahead, let's look at some of the valuation models, because the earnings of Snap are not available, or they're not positive, I would say. The price to sales and the price to book ratios are the most appropriate valuation measures right now. Therefore, Snap seems highly valued with a price to sales ratio of 20.13 times, one of the highest in the interactive media and services industry, which is supported by a price to book ratio of 25 times. That's also the highest in the industry right now. So looking at the profitability analysis based on its gross, operating, and net margin, Snap converts a percentage of its revenues to profits that is in line with other companies in the interactive media and services industry. However, the company, like most others in the industry, is losing money on an operating basis. Now, looking at the growth rates analysis, all through the earnings that Snap grew over the past 12 months, they failed to keep pace with the growth in revenues. This may mean that the company is becoming less efficient at using its resources. However, this result was much better than that of the average company in the interactive media and services industry, and the forecasted growth for Snap, by the way, with the analysts, are definitely increasing significantly. So I'm not too worried about the growth. Now, looking at the financial strength analysis, Snap has a debt to total capital ratio of 39%, which is in line with the interactive media and services industry's norm. The company may have difficulty, though, making interest payments. Its interest coverage ratio is 65 times, is among the highest in the industry, but shows that earnings from day-to-day activities are too small to service the debt. So let me bring it back over here. So what did the analysts say about this? Well, the consensus right now is a moderate buy with a price target of $76 over the next year, with a high of $104 and a low of $60 a share. Going over a few of the analyst reports, the New Constructs recommends investors avoid Snap and says that there's more downside risk than any upside potential. The Street Quant Ratings rate Snap as a hold. The primary factors that they have impacted their ratings are mixed, some indicating strength, some indicating weaknesses, with little evidence to justify the expectation of either a positive or negative performance for the stock relative to most other stocks. And I would say that would be more the short term over the next 12 months. The company's strengths can be seen in multiple of areas, such as its robust revenue growth, solid stock price performance up until the other day, and impressive record earnings per share growth. Now, however, as a counter to these strengths, they say that the growth in the company's net income has been quite unimpressive. Now, Ford Equity Research has a buy recommendation on Snap as the result of their systematic analysis on the three basic characteristics that they look at: earnings strength, the relative valuation, and recent stock price movement. Now, the company has enjoyed a very positive trend in earnings per share over the past 5 quarters, and while recent estimates for the company have remained steady, Snap has posted better than expected results until the quarter 3. Based on operating earning yield, the company is overvalued when compared to all the companies they cover. Share price changes over the next year indicates that Snap will perform very well over the near term. So am I buy, hold, or sell recommendation on Snap? Here are my thoughts. So yes, Snap took a beating this week after the company's quarter 3 earnings that disappointed on multiple levels. Now, the company's outlook is faced with a multitude of challenges in the near future. One is the changes to the Apple's iOS privacy settings, which gives users more control over how the data is used. And the second is the impact of the worldwide supply chain problems. Advertisers might not advertise products if they fear that the products won't make it to the consumers in a timely manner. I think this is more of a short-term problem over the next few quarters, over the next 3 quarters, but I don't think this is a long-term problem for Snap. With that all being said, I am optimistic that Snap's advanced and estimated conversion solutions to create gateways around the iOS obstacles over the next several months, along with that. So I'm kind of positive that they'll find a way. So I'm a long-term bull on Snap. I target a price of around $100 over the next 12 months. And, over the next 6 to 8 months, we could see a bump up back to $70 a share. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.